All right, trade pros, good morning. Welcome to the morning market update for Wednesday, October the 3rd of 2018. This is George Papazov from Trade Pro Academy, joined by our other Trade Pro member here, Marky in the corner. Victorio's off today. He's coming in the afternoon. So today's a big day. It's oil inventory day, and oil inventory is the day in which you could make your entire weekly income off of 1 hour in one day. Huge opportunity. I always wake up extra excited on a Wednesday morning. You get guaranteed volatility with some predictability factor, and that's a welcome opportunity for any experienced trader, right? Don't be afraid of volatility. Embrace it. Volatility is opportunity. All right, in today's morning market update, we're going to talk about some key economic news coming up today. A lot of Fed speakers. We're going to go into looking at Jerome Powell's testimony of yesterday, or not testimony, but speech. And we're going to talk about the $15 an hour bump by Amazon and what that could mean. Okay, so let's get started. First, let's take a trip around the world. In Asia, Japan's down 0.6%. Hong Kong's down 0.1%. China is closed, and India down 1.5%. So we're seeing weakness in Asian markets to start the session today. And we're spilling over into the European market now, and those stocks have stabilized. So you're looking at London up 0.4%, Paris up 0.5%, and Frankfurt down 0.4%. So you're seeing mixed markets, but for the most part, European equities are rallying after a bit of a sluggish Asian session with China being closed for holidays. All right, in the United States, Dow's up 0.2, S&P's up 0.3%, and Nasdaq's up 0.3 percentage point even as well. So you're seeing some continuation on the upside here in the U.S. session also. Yesterday, we had a pretty down day in the S&P 500, and we kept our team and trading room on pace with that. It was a lot. There was a lot of traders stuck long near the highs, and when that happens, you have to understand the dynamics of the market. The longer it goes up, and the more retail traders that end up buying the top, the more stops they get put. And if you're long up top, where do you put your stop loss? Below. If everybody has their stop loss below, and all the buyers that are going to buy have bought, where's the market going? Down. All right, that's how markets sell off and trace into liquidity. They discover liquidity. Remember, the market's not out there to get you. The market's whole point is not to hit your stop. The market's whole point is to get to and through liquidity and price discovery. And if you know that concept, then you know where liquidity is, and it won't be hitting your stop because you'll be on the right side of the move. All right, that's the exciting part. Crude oil's up slightly. However, at the moment, trading 75.29, right in line with where it sort of ended off yesterday. Pretty big rally. Today's crude oil inventory day, so it's going to be slower leading up to that inventory number, and I'm going to keep the powder dry until 10:30. Okay, 1 hour into the open, get that inventory opportunity, and we trade it live with our team, and it's exciting, and we do really well with it. All right, gold prices pretty much flat at 1207. Bitcoin down about a percentage point, 6,400, mid 6,000s. That's where it's hanging out. All right. This morning, Fed's Evan spoke on the economic outlook. I'll give the team in our subscription room an update of what they said. We had at 8:05 Fed's Birkin, the outlook for tomorrow, 5 numbers to watch. That was another speech. I'll also give that update in just a moment to the team. And last but not least, today was a really important jobs number day. At 8:15 in the morning, about 45 minutes ago, the jobs number came out for the month of September. Now, this is the ADP. This is the precursor and less important, but a bit of a foreshadow number for Friday. Friday is a massive non-farm payrolls number, huge opportunity for currency and Forex traders, big opportunity for us as well as futures traders. And we are going to have the room open early on Friday for our elite team. So elite members in the webinar, know this, we got your back. We're going to open it up at 8:15 so we can get ready for the 8:30 rollout. On these Fridays with non-farm payrolls, you really have an opportunity to make money early on and then go home early for the weekend, because the Monday after a non-farm payrolls Friday is a slower day. So really, you're front-loading 2 days of opportunity into one, and you got to execute and take advantage, okay, because the Mondays are slower. So that ADP number came out positive. 230,000 jobs came out versus 184 expected. Really big beat. The prior number was revised higher from 163 to 168. So that's also bullish. So pretty bullish number here early on. Now, if you look at the components of this ADP report, because it's not just about the headline number, it's about what that headline number is broken down into. Let me give you guys the breakdown. Every single component of ADP rocketed higher except for one, and I'll tell you that at the end. Small businesses added 56,000 jobs versus 21,000 expected. Medium business, 99,000 versus 111,000 prior, not expected, prior month. So medium businesses a little bit slower. Large businesses gained 75,000 jobs versus 31,000 last month. Strong beat there. Goods producing sector, 46,000 versus 24,000. Strong number there. Service producing sector, 184,000 service jobs added versus 139 month over month. That's the 103rd straight month of increases in the services sector. That's super bullish. All right, 103 months. I mean, there's what, 12 in a year. So it's been a 10-year consistent increase in this report. That's very impressive. All right, a little bit less than 10. Construction's added 34,000 jobs versus 5, so strong construction numbers. The only one that really whiffed bigger is manufacturing. It was still positive, added 7,000 jobs, but expectation of versus prior month was 23,000. So down below what the prior month number was, but came in still positive. So overall, very clean positive report. 9:45, we have a PMI services index coming up. 10 a.m., top of the hour, we got two things. One thing, ISM non-manufacturing index. So this is a services-driven number. Let's see if it confirms the ADP. So at the top of the hour, you got some opportunity for a little bit of volatility. 10:30, we have our crude oil weekly inventory number. Super opportunistic, lots of volume and volatility. And now the Fed speakers begin after oil number. 12 p.m., Fed's Harker speaking. 1 p.m., Fed Reserve Governor Lyle Brainard, she's speaking on the payment system. 2:15, Fed's Messrs is speaking. 4 p.m., Jerome Powell speaking again, back-to-back 2 days. And 8 p.m., Fed's Kaplan speaking. So all these Fed speakers, depending on what they say, is going to have volatility in the market. Which directions are going to go, which is what everybody wonders. And the answer to that is I don't know, because the market doesn't have a predetermined direction. The market's a real-time instrument of pricing in new information. Therefore, whatever's said, you have to be knowledgeable enough to break down what they're saying and know how that's going to impact the market. And this is the tip I give people when they listen to Fed speakers. Don't think like a one-lot trader. Don't think like a small trader. Think like you're a massive institution. What does that mean for your book? And you're going to discover the best trading opportunity based on speeches. All right. Yesterday, Jerome Powell said that the U.S. economic outlook is remarkably positive. Okay, that's a very bullish statement for the economy. And if you think what that means, here's kind of where you got to start thinking about it. You might say, oh, well, look, that's good. Positive, remarkably positive. Let me buy equities. But here's the thing. He did say assets are approaching levels that are overvalued. He said that in the last Fed speech when they hiked rates last week on Wednesday, 1 week ago, actually today. And now he's saying it's remarkably positive. What does that mean? That means he's trying to build expectation for more interest rate hikes. Interest rate hikes are not good for equities. All right. They're not good for anyone. They're not good for consumers or businesses. What that increase of hawkish statement equates to is a stronger US dollar. All right. So that's how you got to think. You got to start to process and digest this info on a multi-level analysis, not just if this, then that. It's not that black and white. All right. Your 9 to 5 might be in the job that you do, but believe me, these markets are so intertwined and globally interconnected that there's a lot of depth. You got to think deeper. This business has become more about doing deeper analysis and deeper connectivity across the markets. It used to be easy. Non-farm payrolls would come out positive. I remember I've been trading since 2001. I remember it come out positive. You just buy it, close your eyes, you make a couple $1,000s. Ain't like that anymore. All right, it's harder, but it's a good thing. That's what we got. They're speaking at the Atlantic Festival in Washington at 4 p.m. That's Powell's going to kick it off. We got a lot of Fed speakers. So keep your eye out on the charts and your ear out on the news squawk. You need a news service to trade in today's markets more than ever. All right, especially for oil. For trading oil, don't trade without a news service. If you're trading S&Ps, you can get away with it because you can get delayed news for free, but real time is what's important. All right, last but not least, in a major victory for Amazon employees, they are increasing their minimum wage for 350,000 employees up to $15 an hour. Now, based on our estimates and calculations that we did at the head office, that equates about roughly, it's an estimate, $1.2 million an hour increase overall for labor costs for Amazon across all their employees. That's a significant amount, all right? That's a significant cost pressure. And yes, Amazon's wildly profitable. I mean, they do a lot of revenue. Profitability is something that's more recent for them. They are profitable. They can afford to pay their employees more. But I read between the lines. And I'm going to tell you what this could potentially mean. And you're not going to hear this many places. And brace yourself, because this is not going to be a popular opinion. But it is an opinion I feel responsible to share with you, because that's why you guys come here on Monday mornings, Monday to Fridays, to learn stuff. I hope that's why. Here's the opinion. The opinion is this. He's giving a low-end wage increase, or a wage increase to lower-end employees. And when I say lower end, not quality, it's lower end in terms of salary. Okay, it's an entry level or less responsibility of a role. Although I think the people working with customers directly have more responsibility than the CEO. That's my belief. Now, here's the thing. There could be some layoffs coming at Amazon at some point, because he's given that hike, and Amazon's been working behind the scenes to automate a lot of their channel deliveries. And this could be a sign that it's coming up. They held off. Now they give the raise, and they slowly start to replace these workers with automated processes. And that's process. Sorry, Americans, process. I said process once in Chicago, and everyone looked at me strange. Like, what's a process? Process. Oh, process. Really? Anywho, point I'm making is that could be the indication. However, it's a good thing for Amazon employees. Jeff Bezos said, we listened to our critics, thought hard about what we wanted to do, and decided we want to lead. And they've been taking a little bit of heat in the media over overworking their drivers, their staff. And so this is a good publicity stunt. And it's great for employees because you get a raise. And that's great. More money being paid to employees, more buying power, more spending power. The better businesses do, the better the economy does. So that's kind of an update there. But $1.2 million an hour. Imagine that. That's just an increase in costs. That's what we got for you guys today. Look to buy dips and trade equities up until, unless there's a good oil trade equities up until oil inventory at 10:30. I'm going to just sit here and wait, be a little bit more patient today, because I know the volatility comes at 10:30 in oil. That's my prime opportunity. So the more patient I am, the more I have online or more available to do at 10:30. If I go in here and blow my trades out and it's 9:45, 10 a.m., and then 10:30 comes, I'm not going to be happy. All right. I'm going to save the gunpowder for when we need it. So join us. Today's a great day to try out the trading room. You have a 14-day money-back guarantee. Comes in the Pro and Elite bundles. And if you do Elite, you could also check out our Friday room that we're going to do non-farm payrolls in. So this is a great, great week to sign up. Check out what we do. And if you don't like it, you get your money back. No BS, no hassle. Just say the same for me, please refund. Done. Won't even ask you any questions. That's all we got for you guys. See you tomorrow morning. Good luck. Good trading. Remember, volatility picks up around 10:30 today, and it's going to keep going through some of these Fed speeches. Good luck to you out there. Manage your risk. Trade like a trade pro, and we'll see you tomorrow morning at 9 a.m. Take care and goodbye. Thanks, Ricky. All right, trade pros. I want to tell you very briefly what the Federal Reserve speaker said and how that could impact the market today. You're seeing a little bit of a sell-off in equities around these overnight highs, and let me show you a breakdown of